Hey guys, Akil here. Welcome back to another weekend edition of The Trading Edge. Thank you as always for joining me. In today's video, I want to do a follow-up on last weekend's video titled How to Trade Using the AB equals CD pattern. Now, if you guys didn't see it, the AB equals CD pattern is a very simple pattern formation, and it's a core component of my technical analysis and something that I use on a daily basis to make predictions in the market and even sometimes find trading opportunities. In that video, one of the pairs that we did analysis on was the dollar yen, and we made this prediction of where we think price action is likely to go and really how that sets up our mindset for the rest of the week. Well, today I want to show you how we followed through on that trading idea and how we were actually able to execute a pretty decent winning trade. So I'll show you the clip of that real quick. I'll bounce in and out between the clips and kind of give my 2 cents. But before I get into it, do me a favor, hit that like button, hit that share button. I'll make this transition extra slow so you have plenty of time and no excuses not to do so. And we'll start off by recapping a little bit of last week's Trading Edge video just to get you familiar with what we were talking about. And of course, if you're new, introduce you to the topic. And then we'll follow through with how we did analysis throughout the week and actually found a trading opportunity on the dollar yen. I'm not interested in it. What I'll be looking for is a violation of this level. So if price action were to violate this level, then where is price likely to go next? And an easy way to project that is by taking a one-to-one measured move. So an equal length move of our previous impulse leg up. If I go ahead and copy and paste that and just drag it onto here, we have what's called an AB equals CD pattern or an equal measured move. And we can see that that equal measured move comes right into one of our previous VS1 levels looking left, which essentially is a visual representation of structure resistance. And just like with the New Zealand dollar trade that I just showed you, or hopefully you saw the recap of, there's 2 ways we can play this. There's a few ways, whether we're a day trader, whether we're a swing trader, whether we're counter trend, whether we're a trend continuation. But I'll give you guys the real basic version of this. If you're looking to sell, the next level to sell is going to be right up here at our previous level of structure resistance. If you're looking to buy, then if we were to get a break and close above this double top, right, a violation of that pattern, then anywhere from here, right, let's call it, what's the highest here? 113.40s, anywhere from 113.40s up to that prediction level, which is about 114.60s, right? So about 130 pips. Those are going to be buying opportunities, most likely on the lower time frames, maybe your hourly chart, which is going to be like your intraday, short-term swing trading time frame, and of course down on the day trading time frames as well, where you may have multiple opportunities to get involved. So dollar yen is certainly one of the pairs on my radar for this week. Now, if you want to be aggressive, I'm going to give you a way to get involved right here. So it's more of a breakout trade. So in advance of that predicted move. So a different way of thinking. Typically, you're looking for confirmation. If you're a conservative trader, you're looking for confirmation and then the reaction and a chance to take the reaction. If you're more of an aggressive trader, you can also position yourself in advance of that potential breakout. So we go down to the 60-minute chart, right? The 60-minute chart. And you can see that we do have a high here on the 60-minute chart. Now it's immediately retraced, right? If you're looking to position yourself for a breakout, this is where you want to get involved. And we may be double bottoming on the 15. Because if you take a trade right here, where do stops need to go? For you to feel safe, not sorry. Right? Below this level of structure, right? So let's just say we do an ATR below, right? This is 113.07, which means we're going to have some nice even handle. Oh, ATR is 7. So a 1 ATR stop will put us at 13 even, right? Do we want to be at 113 even? Probably not. So we want to get a little bit below there. Let's just say you're going at like 112.96. So you're going to take on an initial risk of about this much. Again, if this is your stop loss. Now, a lot of this trade is going to depend on how you're handling it, right? If you're simply looking for a retest of previous structure highs here as your target, you're still going to get a pretty decent risk reward, right? You can see it's going to be more than a 1-to-1. However, the real gem of this trade comes in what? Anticipating what? What do you think? Anticipating the breakout. So again, loading up on at this position in anticipation that, bear with me guys, in anticipation that we're going to see a move up to that higher level of analysis. Does that make sense? Dollar yen, finish up with this. Here's what I would look for, right? Let's go down to a 15-minute chart, right? What I would look for is two things. One, a hold of this current candle, which has about 5 minutes before it completes. Or if you want to be a little bit more conservative, right? Wait for a higher high, higher close. So wait for this candle to complete. Maybe you get a pin bar on the next one and then wait for some type of higher high, higher close. But we're going to see in 5 minutes if we can hold these lows. If we do, I'm going to enter long. If you are entering here on the 15, you could use a more conservative stop loss because your ATR is going to be a little bit different. So the ATR is essentially going to be 4. I would still get below the 113 even handle just for safety. But you know, you technically could go a little bit higher. All right. Questions on dollar yen. Nice looking setup. Nice looking setup. Where is, go to my black chart. Buying, hold on. All right, so I'm long dollar yen. Get this over to you guys real quick so you can see it. Long dollar yen, right? You can see our double trouble right there. We're gonna get stops again below that 113 even handle, 112.97s. Initial targets up at a retest of the highs because I got high, because I got high, because I got high. And then secondary targets are going to be at that extended level up at, I forgot where we put it, up at the AB equals CD completion. I'll put it up there later. Just worry about getting target ones first. That's the main deal. All right. Let's look at, not the index, USD. All right, so before we carry on, I want to take a quick break. And well, if you've been following me for any time now, you know that an Akil Stokes video isn't an Akil Stokes video without a little nugget of trading psychology because, well, trading psychology may be slightly important or could be the biggest differentiating factor between successful and struggling traders. So I always think it's important that we touch on that subject. And as you just saw, we just executed the trade, and really a couple minutes later, I think it was maybe 15 or 20 minutes later, the trade started moving in our direction. And of course, one of our live room members started talking about it, and I had to say, hey, calm down, relax. This is only the beginning. And I think it's very important to show this because something that gets a lot of traders in trouble is watching trades. I believe I just did a video on this or a podcast on this, one of the two, but you know, if you go back through the archives and watch everyone, you'll see it. But it's very hard to be in a trade and watch it. And that's something that causes a lot of emotional triggers, emotional responses, and really a lot of psychological errors in the market for many new traders. And one of the cool things about being in the live room, being in an environment, right, a structured environment with not only myself, but with other successful traders, is that it somewhat eliminates those urges. When the trader gets the urge to do something they shouldn't, but they know that 10 other live room members are also in the trade and they're not doing it, it's kind of like a positive peer pressure where it's like, okay, well, they're all following their rules, I guess I should too. And those are slow and really small steps into developing really better trading psychology and helping to get rid of some of those mistakes that take so many traders down. Nick says dollar yen moving up a bit after the double bottom on the 15. Yep, no need to worry about that. Don't even look at it, Nick. Yep. Because here's the question. What can I do if I look at it? Nothing. Right? If I'm sitting here with my dollar yen trade, I'll look at it on a range bar chart so it looks even better, right? I'm sitting here and I'm looking at it and I'm like, ooh, that double bottom I took right here, it's going up, it's rallying up, right? All it's doing is messing with my mind. All I'm doing is counting profits. All I'm doing is like, ooh, I'm gonna make this much. All I'm doing is starting to brainwash myself into thinking that this is gonna win. I have no more confidence in this trade winning now than when I originally took the trade. Yep, could be 26.18 for you guys looking for conservative entries. Could be a head and shoulders. Could be look what happened to the left. We could see a repeat of this, and then boom, slam to the downside, right? So I did a podcast on this the other day, right? Just click the X button. Don't even look at it, right? Stops are in place, check. Targets are in place, check. Hasn't gotten to a place where I could actively manage it, check. Nothing I need to do on there. I'd prefer not to watch it. I'm just gonna tempt myself to do something I don't want to do. That's all that's gonna happen. So I don't like watching. That's why you guys, I try to show you guys when I'm in a trade and track it because it helps psychologically for you guys. But me personally, I don't like showing trades that I'm in. And it's not because I'm trying to hide anything from you guys. Know I'm fully transparent with what I'm doing. I just don't like looking at them because guess what? I'm like you guys. I'm no different. It's gonna drive me insane. Gonna drive me crazy looking at it. You drive me crazy. So because this trade happened on a Tuesday, and Tuesday happens to be one of my days for putting out Trading Edge videos, what I decided to do is I decided to come back to our traders and recap the trading opportunity that we took. After all, not everyone can be in the live room. Not everyone has the time to watch the full 3-hour recording of the live room. So I try to keep our traders up to date with what we're taking and how it's progressed. And in the next clip I'm going to show you, it's our Tuesday afternoon Trading Edge video. And you're going to see that the trade had moved pretty well. It was moving positively in our direction. However, it was lingering right before target ones. And again, another psychological factor here is taking targets early. That is, I can't tell you how many traders make that mistake. For you guys that are watching live here for the premiere, do me a favor, type in the chat to your right now. I guess the right for you is going to be over here. Type to the chat in your right if you've ever made that mistake of taking targets early. I know I have, and it kills traders. And it reminds me of a story, or not a story, but I guess a conversation I was having with a trader the other day on Facebook. It was a trader that was, and I mean no offense by this, he was lost. And he was talking about, hey, Akil, I want to get a 100% winning system and strategy. I want to place one trade, make $1 million and leave trading forever, and just was all over the place and just, in my opinion, which I believe is the professional opinion, and if you ask any successful trader out there, they'll probably tell you the same. In my opinion, this trader had the exact wrong mindset about what it takes to be a consistently profitable trader. It was more about ego. Whenever I hear something about, I want to be 100% right, it means that this person has a need to feed their ego. They're not really trading for profit, which should be the goal. They're trading to make themselves feel good, to make themselves say that, hey, I'm better than you because I never lose. And, you know, I make it fully transparent that I'm about a 50% trader, really around 55%. This year's been a little bit down, but I'm about a 50%, 55% trader. So I lose just as much as I win. And I have no problem telling you that, right? I'm so secure in telling you that because I make money at the end of the year. And I've been doing that year after year after year after year. And in the beginning of my trading career, yes, it was about ego. I thought I had to win more percentage-wise to make more, but going through my journey, going through the ups and downs of having a high win percentage but losing money, taught me what was important and what really isn't. At the end of the day, what's important is my P&L. And as long as my P&L is in the positive, I can give a rat's you-know-what about my win percentage. But speaking to this trader, one of the things that he said was, because we went on to talk about win percentages, and I know how people get high win percentages. He says, one of the reasons I get a high win percentage 100%, or I want a high win percentage 100%, is because I never take losses. And I said, well, how do you never take a loss? He said, well, once price gets a little bit in profit, I'll just take the profit out before it turns into a loss. And what is that called? Taking profit early. And it may seem like it's good because, yeah, I made money instead of losing money, but in the bigger picture, it's going to kill you, right? Every solid trading plan works off something called an expectancy, and that takes into account your win percentage and your risk reward. And essentially, your risk reward should be positive, meaning that on average, I shouldn't say that. It depends on your trading style. But for many traders out there, your average reward is going to be some type of multiple of your average risk, meaning 2 to 1, 3 to 1, even 1.5 to 1, something like that. When you win, you're going to win more than what you give back to the market when you lose. And if you do that with an appropriate win percentage, you're going to be consistently profitable, right? However, if you are a trader that has a 1.5 to 1 average risk, yet you're taking your trades, your profits early, well, are you still really trading with that 1.5 to 1 risk? Maybe not. Maybe it takes it down to 1 to 1. Maybe it takes it down even to a negative risk reward. And before you know it, guess what? You have this awesome win percentage, but you're not actually producing profit. So again, taking targets early is a big thing. And in the clip you're going to see in a little bit, I apologize for getting long-winded, you're going to see just kind of the discipline of being able to stick with a trade while it's hovering right under that first profit target. Hey traders, Akil here, and welcome back to another Trading Edge video. It is Tuesday, November 6th. Thank you for joining me. Also, thank you for all you guys that are new. I know Jason introduced himself and what the Trading Edge is yesterday, but wanted to pop in and say hi as well. Hopefully you're taking advantage of the platform. Hopefully you're taking advantage of the chat and introducing yourself to our great network of traders. Now, I do have the full recording of today's New York live trading room. All right, so I just wanted to pop in and follow up on this trade. It's about 9 o'clock p.m. and you can see that a lot has happened since I last spoke to you guys. We did hit target ones, and then you can see price action almost immediately fell all the way down, taking me out for break even on the second half of my position before rallying back up. And you may be asking yourself, well, Keel, how come we saw this much action in the market? Typically after 5 o'clock, really after about 3 o'clock p.m. New York time, the market tends to die down as the London session is over, the US session is coming towards an end, and the Asia session is really a slower time in the market. There's not too much action that happens. Well, keep in mind that today is an election day in the U.S., a very important election as we get set up for the next presidential election. And just like with many other elections, the market is, or I should say, just like with other high impact news events, the market is bouncing up and down based off of the different results that are coming in and how the market interprets that for the future. So, if you've been with me all day, you've been hearing me say that today is going to be a rocky day because of that election, and we're starting to see that in the markets. But anyway, it was a good trade. The analysis was solid. The execution was solid. We did get first targets out of it, which is good. You're not always going to get your full profit potential out of every trade, but we did get something, and something is better than nothing. More importantly, we reduced our risk and protected ourselves on the back end, so we didn't give anything back to the market. And what we'll do is we'll come into the market tomorrow. We'll come into the live room. I already shared with our traders a few other opportunities that are on my radar. We'll come into trading day tomorrow and see if we can do the same thing, which is consistently execute the plan. And, well, after all, consistent analysis plus consistent execution equals consistent profitability. So as you can see, the trade was a winner, which is good. I'm not taking anything away from that, but it wasn't as good as it could have been. And you guys saw the clip. The US election was that night. We saw bounces up, bounces down, and we ended up being stopped out for break even on the second half of our position. Not only that, but after being stopped out for break even, the market reversed right away and ended up getting to that 114 even handle where our secondary targets would have been. And that can be very frustrating as a trader. It's very frustrating to really see a trading opportunity play out where you do everything right, you make the prediction correctly, you make the execution correctly, and you just don't get all of the pie. But unfortunately, that's the reality of trading. And one of the reasons I like using 2 targets is because I want to give myself a very conservative target where I can make profit, I can put money in the bank, and I can reduce my risk. With the secondary target, those are typically at levels that I think price will go to, but I'm not as confident as in the first target. And trades like this, it works out in the favor because at least we make something, and something is always better than nothing, right? Typically, there are 4 type of trading outcomes you want to see, right? Write this down. 4 types of trading outcomes you want to see. There are small winners. For me, I would call those target 1 winners. There are big winners. Those are multi-target winners. Target 1, target 2, target 1, 2, 3, however many you're taking. There are break-even trades, and there are small losses. So again, think about it like this. There are small winners, there are big winners, there are break-even trades, and there are small losses. So who can tell me what's missing? Again, you guys that are watching live, type this in the chat to your right. If you're watching this not live, you can type it in the comment section below. What's missing? Right? Big losses, because that's what kills traders, right? Small losses don't kill traders. Taking small wins, as long as you're following your rules, doesn't kill traders. It's when you allow those big losses, moving those stops back, or just being undereducated with your stop loss placement to begin with, that's what kills traders, because those big losses will take up multiple wins, where 1 win will make up for multiple losses if you're able to keep those losses small, or if you're able to get those stops to break even and keep your quote unquote losing trades to break even trades. So I hope you guys enjoyed this video. If you can take one more thing from it, it's the concept that trading is all about the analysis to me. Many new traders come in with the idea of like, I have to find the trade, I have to find the trade, I have to find the trade. And I see this day in and day out in the live trading room, especially with newer members. And when you have that mindset, I have to find the trade, it really clouds your judgment, because here's a secret, right? If you want something, you'll find it, right? I can go into any chart, you can give me any chart, any time frame, I can give you a reason to buy and a reason to sell, right? If we want something bad enough, we'll find a reason to do it. But that's not what we want to do as traders. As traders, our one job should be to do analysis. So just like I showed you in last week's video, right? We didn't look at any trades. We just did analysis. We identified what price was doing, and we made a prediction, right? If we do that on a consistent basis, good trading opportunities like the one I showed you, they'll pop out to us. We don't have to go looking for them. We'll be doing analysis and we'll be like, oh, okay, yeah, there it goes, boom, and we take the trade. So again, if there's one thing you take from that video, or from this video, that's it. And of course, if you liked what you see, guys, please take a second and do 4 things. Hit the like button, takes a second out of your day. Share this on social media. Let me know what your favorite part was. Of course, tag me when you share it. That way I can give you the credit you deserve for being social and supportive. Leave a comment below, even if it's like, hey, Akil, great video. Or again, tell me what parts you liked, too long, too short, all that fun stuff. Any type of positive criticism, constructive criticism. Doesn't have to be positive. Constructive criticism is good for me making these videos better for you guys. It's always interesting with the, no offense, but the YouTube community is somewhat a little different than the clients that I work with on a closer basis. So I'm always trying to find that balance of giving quality content, but dumbing it down enough. And again, I don't mean any offense by this, but making it simple enough for a newer trader to understand as well. And the last thing is what I say: like, comment, share, subscribe if you're new. Not only to this, but subscribe to the Trading Coach podcast as well. So do all 4 of those things. I'll see you guys on the platform for you guys that are clients or trial members. If you're not on the platform, do it. $1, 14 days, lots of goodness, right? Live rooms, accountability sessions, private chats, indicators, softwares, all that fun stuff for $1. no auto bill, no commitment. After 14 days, boom, you just lose access. Give it a try, educate yourself as a trader, and I'll see you guys next time I'm here on YouTube. All right, take care.